Three types of investors that will lose in this upcoming downturn. I'm going to cover three different investors in stocks, crypto, and this last one, I'm going to wait till we get there to describe that person, that type of person. I'll be having my wife just off here helping me with questions, so I make sure to cover all the ground I can. But let's jump right in. Why are stocks, or investors of stock, the highest risk of losing in this downturn? Well, Warren Buffett reads about 500 pages a day just to stay in good investments, uh, from actual books to publications to what companies are doing with their money, their balance sheets, how they're investing in new capital markets, and how they're getting return on investment for themselves as businesses. So when Coca-Cola sends out these massive, 3,000 page investor briefs, he's reading that sort of stuff all day. And so I think the typical stock investor actually has a life and does not have that sort of reading intensity that comes with being a successful stock investor, as Warren Buffett is. But even larger than that, Warren Buffett is just not a stock investor by itself. He's a business investor. So he basically has what you would call in World War II these commando units that you would just send in a parachute down in enemy lines, and they would just do everything to bring that city to its knees and move on to the next city. So that's similar to what Warren Buffett does. He buys businesses with great leaders and then just let them do their thing. Keep on doing great things. So that's one reason. I also wanted to briefly cover why another, specifically tech investors in stocks, are bad. And it's because of the pandemic. A lot of folks have been using tech and saying how great it is and investing in it because of how many remote workers are on, how that's been a massive uptick during the pandemic, but now we're coming back to a reality, right? We have that plateau going back into normalcy. So, question.
So all stock is bad? Or is it just bad for right now?
So is all stock bad? I wouldn't say it's all bad. Since the 1940s, stocks have been in a generally upward trajectory. But what I'm saying is specifically the majority of the population does not have the capacity to spend full time reading through publications. And so most stock investors will not win in the next year or two in the short term. So that's what I mean with stock investors in general can lose in a downturn, especially when I go into my next couple points here.
So if I'm not investing in stock because right now is not the best move, what would be the best move right now?
The best move to do instead of stocks is going to be real estate. And of course, I'm biased, right? I've been in real estate, but also many tens of thousands of millionaires, billionaires have done the same thing. And so real estate is also something that's tangible. It's not a piece of paper that you're buying, that you get a minuscule percentage of that piece of paper in stocks. And you're not paying some guy at Fidelity, 2% a year of some fee for him just sitting at his desk. When you're buying real estate and real estate investment assets, you're not only educating yourself on how to get something tangible and get something that you could bring to your kids, you could literally walk up to it. It's not a piece of paper that somebody could attribute value to. This is actual building that is generating you cash flow, generating you appreciation. And so that's my personal investment preference. Moving on to crypto. So this has been big in the last few years, and I pray that before that massive downturn happened in the last few years that you got out of it and were able to save that money. You as an investor, you want to really get a gut check of when you should exit an investment, which is sell off and hold the money for something even better. You don't always just want to hold on to something just hoping that it'll keep going higher and higher and higher. It's not. I don't think it's practical. The way I approach it in properties is, for example, one property I bought 10 years ago. I said, okay, this is a 3-2. I added a little bit of square footage to it, added a unit to it, and I decided, okay, selling it at about upper 500,000 range. This is going to be kind of the peak for the next 5 to 10 years, and so the money I earned from this, I could use to go buy, 5, 10 more properties. So the opportunity cost of getting that cash out and buying X amount more is something you as an investor also have to consider. And so comparing that to something like crypto, you have an asset that's not really backed by much at all. It's kind of, again, like a piece of paper. You're the biggest concern I had when I came across crypto was I had somebody that tried to sell me, hey Ivan, you should go and make your own coin around real estate. And I told them, okay, tell me how it works. And he basically said, well, we build it around your brand. We have a specific kind of general industry term for it, such as housing coins or something like that. And I said, okay, well, how do you evaluate that? How does it get increase in value? And he said, well, whenever you attribute a transaction to it, for example, you want to transact a property through it. Well, the amount of that transaction, let's say it's 500,000, would increase the value of that coin to 500,000. And it sounds nice, but in theory, in actuality, I'm still selling that property down the line or refinancing it down the line using cash, using the public market, using real estate agents. And so it's kind of like making pretend money out in a separate world, which I'm concerned with it. And then there's another concern, which is around capacity, which is I did some research around how many transactions it could accommodate, and it's limited to, I believe, 1,500 per minute, versus a company like Visa that processes unlimited currencies, but they process about 70,000 transactions a minute. So this massive, 700 time difference of capacity is a concern for me, as if I'm going to invest in something, I want it to have unlimited capacity, right? Not just limited to this amount. Question.
Yes. So if I have extra money, you're saying I don't always have to go out and buy something intangible, or even something tangible. I can expand on the real estate I have?
Yeah. If you're already in real estate, I foresee some sort of dip or plateau in the market. So you could hold on to that capital, or if you have an existing portfolio, you could tap into that. And a lot of folks don't even know that you could qualify for quite a bit of what they call cash out refinance loans, which is to say, let's say you have a $100,000 property you bought 5 years ago. Well, it's probably worth $200,000 now, especially with how the market has been going. Well, you go to a bank and you tell them, hey, I want to pull out equity from this property, and they'll give you between 70 to 80% of the value of that property. So 80% of 200 is 160, I believe. So now you have 60,000 back. Actually, you have probably 80,000 back if you put 20 grand down, and now you have like 80 grand to play with and buy more properties. With 80 grand, you could probably buy at least 4 more properties. So you're that much more richer with actual tangible assets. And to address the question around intangible, it doesn't hurt to diversify into different types of assets, right? These folks that got into Bitcoin early when it was starting, I pray that they got out before their their value went from like 60,000 down to 12. I believe that was the rough numbers recently. So it doesn't hurt. Like if you put $1,000 here, $1,000 there, something's going to hit. All right. So to wrap up the crypto side, basically my main concern here is around speculation. If you're telling me something I just made out of thin air became $500,000 more valuable without something tangible being parked in it, it's just a transaction. It's speculative, it's concerning, and it's also why the Federal Reserve, is hunkering down on it, because it's highly susceptible to Ponzi schemes, which is something we've seen a lot of, actually. A lot of folks got a lot of money saying they have the best coin ever, and they just ran off with their billions of dollars and got surgery on their face and just went, ha ha ha, yes, got him again. And so a lot of folks think the Fed is evil, but they actually want to protect you and, avoid these Ponzi schemes from going out, which is why we have all these securities laws. That's why I invest into making sure I'm up to date with all the securities laws, got my attorneys preparing the right paperwork for my funds rather, and stuff like this. And to end that point around speculation, whenever you're investing, you want to make sure you have secured collateral as opposed to unsecured. What I mean by that is, when you're investing in real estate, you have something secured by a property. You could take it away if you don't get the results. Like, say you're giving a mortgage to somebody on a property, you could foreclose on it. If you invest in a crypto, $10,000, and it just goes bust, there's nothing to secure. You're securing, again, a sheet of paper, or you're wishing upon a star that a star exists. Okay, so did you have a question here?
Yes, so it was around the fund, because there may be times where people don't have enough money to actually buy a property, but they don't want it to sit in the bank. So I was going to ask, like, what are their options with that if you don't want them buying cryptocurrencies, because that's not the best move for right now.
Okay, if they don't want to invest in stocks or crypto right now, I got to do my own plug, right? My real estate fund will welcome you with open hands and explain how the fund works. But I'm not self-serving, I'm going to give you other options. Educate yourself on real estate investment. There's lots of resources out there. I'm going to be starting my own kind of coaching education platform, but you could do it. You don't necessarily need me. If you want to hustle and learn it on your own and get kind of hit in the head a little bit, if you don't mind that, you could do it. It costs, maybe a couple grand to invest in these sorts of things, but the investment is worth it. If I told you that $697 program for just basic information I got from real estate coaching, maybe 7 years ago now, was a big part of what has allowed me to make millions in real estate to this day, would you have a different consideration for investing in that program? Of course you would, because you want to make returns for yourself, right? You don't want to just sit on the sidelines and, again, wish upon a star that something will happen. You got to invest your money well. And, Grant Cardone said a few months ago when I was hanging out with him in his conference, the only people that become millionaires or billionaires are people that invest. They're not people that just keep on working their career and just going through the motions. You just can't multiply money that way. All right.
And when you say invest, you mean invest in...
When I say invest, I mean invest in not only yourself.
Yeah.
For me, invest in my fund. You could, of course, do that.
Mentors.
You could also do mentors too. Yeah, there's different aspects of it. I would actually argue you can't do a lot of real estate stuff without mentors and coaches. But speaking of stuff you can't do, this last point really brings it all home. These sorts of people will make the biggest losses because they're unaware of their emotions. The people that stayed through 2008 in their investments and were patient in good companies, they made it out alive. The people that just went, the world is ending, go and run into a bush and get your bushel baskets of apples, because that's all you're going to get to survive for the rest of eternity. So the people I'm going to describe now is people that don't take therapy. Okay? You let your emotions get the best of you. You're gonna buy or sell out of stocks ahead of time. You're not going to invest in yourself. You're not going to be even able to identify when you're tripping out on yourself, or identify when you're being unhealthily angry or unhealthily not discerning things. You're kind of just gonna allow your emotions to get the best of you. It's kind of like that old saying, you could stomach something, but at some point it's going to come out and it's going to be, not so pretty. So, this term along these lines is when there's blood on the streets, there's going to be maximum opportunity for investment. It's a nasty term, right, to see blood on the streets, but the thing is that's when people sell at the most lowest, and so that proves for buying opportunities. But if you're one of those people with blood and you stabbed yourself on the ground, you're not going to be able to buy anything and buy good deals. Did you have a question here?
Yeah, so basically with helping to control or manage your emotions better, you're able to see more opportunity. Is that what you're saying?
Yes. You're able to see more opportunity if you're able to control your emotions. So I'll give you a recent example. This deal I've been working for about 2 months now. There were some things that I didn't like along the way. And I could have went off on the seller of the property. Say, you should give me this, and you should give me that, and you should give me this. But that would have been destroying the view of the end. This property could make massive amounts of cash flow. It's basically like printing money. And if I had if I had let my emotions get the best of me, I would have said things to the seller that would have not proved to bring more concessions. All right? Somebody's going to only negotiate with you and work with you if they actually like you. If you're this emotional person that's saying, no, I'm going to take you for your 1 cent and for your bank and for your mama and your home. Like, nobody wants to do business with that guy. All right? If you're fighting over pennies, then how are you going to make millions of dollars? Is there any other questions, Jim?
I thought that was I thought that was a pretty great ending to that segment. So, question about therapy. So, what if I go on Better Health or some other place? You can bleep that out. I didn't mean to advertise. Or something like that, and I meet a therapist and I find out we're not a good fit. Does that mean I no longer need therapy?
Okay, so if you go to a therapist and you find out you're not a good fit, go to another one. It's similar to going to a church, right? You may go to many churches that aren't actually preaching the gospel correctly, or they are caught up in their sin as leaders and they're not wanting to go back on that sin. Similar with a therapist, just move on. But I also want to encourage this: if this keeps happening, of moving on from therapists 3 to 5 times, is there something you got to ask yourself? Are you really putting in the work that they're asking you to do, or them challenging you or saying something you don't like? Is that making you just want to go into a shell and not talk to anybody? That's similar with investments too. Hey, if you're going down the drain, you should be talking to somebody about that. And not even necessarily if you want help, but saying, hey, I just need a vent about this. This is an uncomfortable place I'm in. And if you want help, ask them, like, hey, what should I do in this? There's lots of actually millionaires that would love to help you because they've been down the same path and they would like to avoid seeing somebody else fall in that same path.
So you're saying, like, it's silly to try to do it on your own when you can have so much support around.
Yes, it's silly to do everything on your own when you could have a massive support system around you if you just allow it. If you just open the doors to that being a real thing. And by the way, that takes some work. Not just therapy. I'm talking about going to networking events, meeting the right people, going to a higher and higher level networking events and mastermind groups where you're having to invest money, where you're having to talk to people that may intimidate you. I've actually told executives over a text message. Hey, Alex, you intimidate me. And just doing that actually got me liberation. Eh, to him, it might have come off weird. I don't care. We actually don't even talk to him. He went off a different way. But to me, it's cool to be able to be so vulnerable with myself and be so comfortable with myself to say that to another man, right? And if I'm able to be vulnerable like that, then what could I do? What else could I do? Close. I wanted to put that last piece on a button and say one beautiful thing I could share with my wife and being vulnerable is that when I'm in public with her, I feel comfortable just laying my head on her shoulder if I'm feeling, you know, not sleepy. But if I'm feeling overwhelmed by the spirit, or if I feel just emotionally engaged in the moment, and I can't say that about myself 5 years ago, because I was in this thinking of I must be the man, and men don't show weakness, especially in public. And so there's missing opportunity there to say I'm never going to be weak in public, even one-on-one with somebody. It's to say I'm going to fall on my butt on my own all the time. So with that, I'll close. Again, to summarize, 3 types of investors that will lose in this next downturn: stock investors, crypto investors, and people that just refuse to take therapy. See you later.